We're here at the beautiful Breakers Hotel in Palm Beach, Florida. Here, Thanksgiving weekend 2016.
Well, I hope everyone had a wonderful Thanksgiving weekend like I did. For those of you guys that are not in the United States, hope you had a good couple days off as well, of course. And that brings me to a quick update here on the stock market. Following the Thanksgiving holiday, we tend to see, if we look at this purely statistically and seasonally for that matter, we tend to see about an 80% chance of year-end rallies. In other words, an 8 out of 10 times between the period of from Thanksgiving into year-end, we tend to see some sort of a rally in U.S. stocks. 8 out of 10 times. Again, that's not 10 out of 10. Nothing is 10 out of 10. But 8 out of 10 tends to be a pretty good number. Now, what I want to go through real quick, though, is kind of looking at the path of what we may be able to expect of how we could get there into year. And like what I said last week in one of my vlogs is that I do think here we're probably somewhat overbought, particularly if we look at the Russell 2000. So let me quickly go over to the Russell 2000. We can look at the IWM ETF for that. And if we look at this sort of lens of sort of very near-term moving averages, I'd like to use an 8 and 21-day moving average. Very simply, the Russell 2000, as much as it looks constructive, in my opinion, through a multi-month lens, I think the immediate to intermediate term picture here does argue for this thing to be very overbought. So the path of least resistance, as far as I'm concerned, and again, this is really looking at statistical seasonal patterns, we would expect to see some sort of a pullback here, at the very least sort of a sideways move, but maybe even a little bit of a pullback to the downside. I'm not sure how deep, of course. There is a first up gap in the IWM ETF that would fill around 127.30. But something like this into maybe the middle part, maybe even the third week of December, before we then see something in this sort of magnitude. Maybe we make new highs, maybe we don't. But some sort of relief rally then from there. So in other words, the main point I want to make here as we move into the post-Thanksgiving weeks here, 1, 2, 3 weeks after post-Thanksgiving, I think chasing stocks higher, broadly speaking, is a low probability trade. At the same time, we continue to see the sector and group rotation. We've seen, industrials blast higher after the election. We've seen financials blast higher after the election. We have seen the transportation stocks blast higher after the election. We've seen restaurant stocks, all sorts of stuff blast higher. And a lot of these things are very, very stretched. So transport, industrials, financials, a lot of these things are very, very stretched. So if we're looking at this from a group and rotation perspective, and group rotation and sector rotation perspective, I would look to things like, for example, biotechnology stocks, which might be giving us the next potential round of sector or group rotation. So I'm looking for something like the IBB to see if it can break above, let's call it 292 or so. That could be something interesting. And alongside, at the same time, looking at various housing stocks like a KB Homes, or KB Home, excuse me, as a single name stock here, and that whole spectrum as well still looks very, very bullish. Again, immediate term overbought, but as that group and sector rotation continues, and I do expect that to continue into year end, it's important to not chase the stocks or the sectors higher that have rallied very, very strongly over the past couple of weeks, but to give those a little bit of pause and then maybe buy them back on a dip as we potentially see another year end rally. So I hope this makes sense, guys, and I'll see you in the next vlog.
Hi, sexy mama. What are you doing?